What's going on, guys? In today's video, I want to talk about the four phases of market cycles. But before you do that, I encourage you to press pause and open a new tab and go watch FX Brawler's Reversal Pattern 1 Explained, because we're going to use some of the concepts I've touched on in the previous video. Market cycles matter because they are the ones that create structures. So depending on which time frame you're looking at, if you're looking, for instance, at a weekly or a daily time frame, you can figure out what type of structure you are and where you're at in the market cycle in order to find some shorter term opportunities with using technical analysis. So let's go over the four phases of market cycles. The first one would be the accumulation phase, and it's in this zone that you're going to see reversal patterns like reversed head and shoulders, Wyckoff accumulation patterns, double bottoms and triple bottoms and things of that nature. And once the demand becomes bigger than the supply, you have the markup, and the market goes up, which is the second phase, up until the third phase, which is the distribution area in the overbought territory. From there, supply becomes bigger than demand, and you have the markdown. So these are the four phases. It's nothing really complicated to understand, but it's important to realize that it is at this point that you're going to have all these bullish reversal patterns when you're in the accumulation zone, and then you're going to have these bearish reversal patterns when you're in the distribution zone. So it's in these situations that I'm looking for trades. So I look at weekly and monthly charts, and I try to figure out the market cycles that we're in based off of the structure that we're trading. And then I look at like 4 hour, 1 hour, 15-minute charts even to try to find a reversal pattern as I zoom in inside of the overbought or oversold territory. So let me show you what that means exactly. So the setup for this is I'm waiting for waves to occur. And once I see these waves, I wait for these two resistances to show up, and then I can trace my line and my two supports as well. And it's from there that I have my channel, which we'll call the structure. And then what I'm waiting for here is for price to reach the third point, which is going to be either in the oversold or overbought territory. So up here on the top of the channel would be the overbought, and here would be the oversold. And it's only in these zones that I'll try to figure out if I can find an entry with technical analysis. Meanwhile, I do nothing. I sit on my hands and I wait for a pattern to occur. Like I'm waiting for money to fall on my lap. So once I find a structure, I identify the regression line, which is the orange dotted line. And this is basically the middle point of the channel or of whatever structure I'm trading. And it acts as a magnet basically. So this would be like the equilibrium in price, and I'm trying to buy low and sell high relative to the regression. So over here on point 3, I'm looking for a short opportunity. So I'm going to look at the price action and hopefully sell the third position, and maybe even find an opportunity to buy on the third point as well in the same structure. But keep in mind that every single structure, it will get destroyed eventually to make room for a new structure, usually in a different trend. And so the longer a structure has been valid, the higher the chance of it becoming obsolete. So these structures occur both in sideways trends, in uptrends, as well as in downtrends. The cycles are the same. You have these four phases, but it doesn't matter in what structure of the market you're trading. The important thing is to try to identify them and wait for them to be clear, or do nothing if it's not clear to you. So I'll show you some examples here. So we have a downward structure. And I have the 2 points at the bottom for the support, and I have 2 points at the top for the resistance, and this forms my channel. And it's from the moment that I have that, then I can start looking at some setups once price reaches these levels. And once the downward channel becomes broken and the structure changes, then I'm looking for buy moves. I never sell when it's in an uptrend. I don't sell per se when it gets overbought. What I do is I liquidate, and the reverse applies to when it's a downtrend. I try to short here and I try to liquidate there, but I don't try to go long. Because the odds are not in my favor. It's not in the direction of the structure. And over here, you'll notice that there's some accumulation above. I didn't trace a regression here, but there's accumulation above the regression. And if you look closely over here, you have a reversed head and shoulder pattern that occurred, and then price broke out of that neckline that I didn't trace, but you can see it, I'm sure, on the chart. And then we have the new structure. So we have the markdown, we have the accumulation pattern, and then we have the mark up. So we have 3 phases right here. And then from there, I have my point 1 and point 2 that are traced, and then point 1 and point 2 that are traced for the resistance. And then I'm looking at point 3 over here. So we have price coming down, and I'm looking to buy. So it's at this point, at point 3, that I will look on the shorter time frame. So that was the weekly. Now we're on the 4-hour chart. And if you've watched my last video, FX Brawlers reversal pattern 1, you will understand this pattern over here. So it's the same thing, but reversed. So right now, it's this is an accumulation pattern with a megaphone that gets broken down. The low becomes tested, gets rejected right away, and then gets pushed back to the regression, tests it again, so we have a chance for entry here as well, and then it moves all the way to the upper boundaries of the resistance, and then it messes around the regression. And basically, when I see a pattern like this, I'm trying to liquidate close to the regression, unless I don't see an opportunity elsewhere in the market. But usually, whenever the price gets close to the regression, if I find an opportunity on a different instrument to go long at overbought territory or oversold territory, then I will liquidate part of the current position that I have, so I can better allocate the capital to a better opportunity. So that's what I wanted to talk to you about today, how I use market cycles within structures, and how I use multiple time frames that we've talked about in a previous video in this little Forex trading for beginners series. So I hope you enjoyed. If you did, give it a like and subscribe to the channel, and I'll see you in the next video.